Hello, I'm Craig Popp, and this is Charts That Matter. The year 2023 will be remembered by economists and investors as 365 days of resiliency that defied expectations. In this episode of Charts That Matter, I will dive into the U.S. economic landscape and summarize the major factors that shape the economic trajectory for the year. The data points in this episode are taken from the 2023 Economic Summary by Raymond James Chief Economists. If you'd like to read the full report, please see the link below. Let's begin by looking at economic growth. The economy entered the year with Bloomberg economics model giving it a 100% chance of a recession. Historically, great predictors of recessions like the leading economic index and an inverted yield curve also failed to correctly predict a recession in 2023. The resilience of the U.S. economy can be largely attributed to a couple of tailwinds. First, strong consumer spending boosted by accumulated pandemic excess savings and an incredibly robust labor market. Second, U.S. households that sat pretty in terms of debt as a percentage of disposable income, as well as its debt service ratio compared to previous cycles, as this past cycle was a fiscal cycle rather than a monetary cycle in which households borrow too much and then they get in trouble. Let's take a look at some major themes for the year. Inflation. Inflation remained a major concern for the year, but cooled down significantly from the June highs of 8.9% in 2022 to around 3%. Inflationary pressures should continue to normalize as lagging components of the consumer price index, such as shelter, are starting to be reflected in the inflation data. The labor market. Unemployment numbers looked great in 2023, with over 2.5 million jobs added throughout the year and an unemployment rate near record low levels. Real wages began to grow again, and inflation trended lower from last year's peak, and job openings continued to weaken. Housing. Home prices increased yet again in 2023, but at a slower pace than in the previous year. The lack of inventory continues to affect the sector and has reduced the effects of higher mortgage rates. Existing home sales have suffered the most during the year due to many sellers being unwilling to put their property on the market, as they are currently enjoying low mortgage rates and would not be able to obtain similar rates in today's mortgage market. New home sales have benefited from this lack of inventory in existing home sales, as well as builders' ability to provide incentives and lower rates to buyers. To conclude, the U.S. economic landscape in 2023 defied bleak predictions. The strength of the labor market, the consumer, and various sectors of the economy, coupled with strategic government initiatives, have allowed the U.S. economy to not only defy the odds in 2023, but to set the stage for growth in 2024, despite many economists forecasting a mild recession. I also feel it is proof to not let predictions from market pundits influence investment decisions. These unfavorable outlooks would have positioned you defensively for the year, missing out on strong market performance. Thanks for watching. We'll see you next time.